Okay, welcome back. So in this video, we're going to be going through another useful tool. It's called the Fibonacci retracement tool. And if you're using TradingView, I believe most of the exchanges will have these types of tools available, but definitely TradingView is going to be, your go-to to access this tool. And it's on the sidebar. You want to go to like the second option, third option, and it's called Fib retracement, right? Quick background, very quickly. Fibonacci, it is a series of mathematical sequences, right? It was founded by a famous Italian mathematician. I think his name was Leonardo Pisano, also known as Fibonacci, and it's pretty much like one of those mathematical phenomenons. The Fibonacci sequences can be found everywhere in life. It's found in nature. How nature is, how nature just goes about life, and it's one of those kind of phenomenal things. But of course, Fibonacci has made its way into the charts and the financial systems and stuff. So retracement is the key word, I believe, when it comes to understanding how this tool works. So the Fibonacci retracement is something that you will use for your entries, exits, and so on and so forth, because what you need to understand is that price, retracement is the most important word, because when price goes down, it will retrace back up, right? And then it will retrace back down, and whether you're biased for your trade, by bias you're looking for a trade to go long, and when you're trading long, you're expecting your price action to go up, retrace down, and go back up, right? That's why retrace is so important. And then secondly, the same concept can be used for short trades. If you're short trading, your bias will be you're expecting price action to keep moving down. So price action will go down, retrace back up, and continue back down. Okay, so quick overlay on that. But let's get into exactly how you can use the Fibonacci retracement tool for your trading, right, and your entries. So I'm gonna select the Fib retracement, and how it works is that you want to find a point where from a high to an extreme low, right? So we have this zone right here. We have this zone. This is your high, and this is your low. Okay. What I'm actually going to do is show you how this works in real time with the chart. Okay. So we're coming from a previous high, and now we've dropped to this low. So you take your Fib retracement tool, and you start from the high, and you bring the last line to the low, and you can stretch it across as far as you want. Okay. And personally, the default settings, they give you a lot more ratios. Personally, this is the settings that I use. A lot of default settings, they have much more ratios involved, and it just gets a bit clunky to me. And you can kind of take away the background and the colors if you want to adjust that. And you can also, move the labels to the right if it makes it easier for you. So, it's very customizable, but, memorize these options, because this is what I use. It just makes it, these are the most important ones to me. But by all means, do whatever makes you, whatever you're comfortable with. But this is what I use. So from the high to the low. So we are expecting price to retrace back up to this zone, right? This zone between the 0.68, 0.618 and 0.5. These two zones, traders refer to this as the golden zone, because price will typically pull towards these two zones. And when you see price pull towards this zone, this is when you're going to be looking to enter. So you want to see price action come into the zone, the candle close, and when the candle close, and when you see the reversal. So we're looking for a long trade here, right? So price has pulled down, and now we're looking for a reversal. So we want to see price pull back up, a bullish candle, a green candle form anywhere in between 0.05 and 0.618, and then we'll be looking for a long trade to take profit at a higher trend. So let me show you how that looks. Right here is where you want to enter your trade. So as you see, price came from the low, pulled all the way back up, and retraced back down. This is your confirmation that your bias of an uptrend is being respected. All right. If this price action kept falling down, then you know that you can't get into a long trade. So the fact that price moved up, retraced right back into this golden pocket, the 618 and the 0.5 pocket, this is where you make your entry, right? So you set your entry for a long position here. Set your stop loss, just below the break of the last candle, and maybe a previous high. Okay. So let me just bring it back one more time so you can see it. So you're looking to enter in this pocket here, the golden pocket. Let me slow down the time a little bit. Clear example. Price moves from the low, pushes up, hits this perfectly, and this is where you enter. And as you can see, you have a winning trade here. You take profit, gets touched, and that's it. You close out with a winning trade, right? Again, trading is really about confirmation. You want to make sure that you're entering and you have your confirmations in line, and this tool is really useful for that exact thing. So a lot of traders get trapped in moves like this because they'll see the low and they say, all right, well, price is at a probably all-time low. See a massive bullish candle like this form, and then it's going up, and they think that they're missing a massive run, and they'll probably enter somewhere around this zone, and thinking that it's going to keep going up, but without knowing the concept of price retracement and price action and how it works, they're probably going to get stopped out because they're going to enter here, put the stop loss somewhere here, and just like that, you lost a trade that you could have won if you just expanded your knowledge on these key concepts, right? It's very important. So Fibonacci retracement tool is extremely powerful for these type of scenarios. Now I'm going to show you it can work on a downtrend and a short situation. So we have, let's say a good example would be this point here. We have the high and we have the low. So I'm going to bring this back right to this point so you can see in real time how this works. So you want to take the same Fibonacci retracement tool, start from the high and trace it down right to the low. And what you will be expecting price to do at this point, you watch the price action, and when you see a bullish green candle form, this is when you will expect price to reach this zone, 0.5, or 0.68 golden pocket and retrace back down. So this is where you enter. This is where you enter for a short trade. This is where you confirm your bias for the price action to continue back downwards. So major drop, retrace is normally 50%, so on and so forth, but this is why the Fibonacci has this sequence, right? So push back up for a retrace, and if you see a bearish red candle form at this point, then that's confirmation for your entry. You enter short like this. You enter short, put your stop loss, say at the break of the green candle, and take profit. And when it comes to your entries and risk management, you should always be cautious. Do a 3-to-1 safe take profit. So if you're risking $10, your take profit should be $30. It's as simple as that. You can always go, you can always risk $5 and take profit 4 to 5, depending on how comfortable and confident you are in your trade. So let me just get rid of this. And let me just show you how the Fibonacci retracement tool is going to work in this type of scenario. So let's hit play. We're going to see. So major from the high, major move down. You will watch this price action for it to confirm within this zone right here, the 618 and the 0.5, which is 50%. And as you see, these things are not always clear cut or right on the mark, but the candle wick did close right in the 0.5 area, right? 0.5 between the 0.3 and 0.5. So, it's a good range to understand, right? And as you can see, price hit the low, retraced it back up to this golden pocket. It's fine if it's just a wick that closes in there, but as long as you see the transition from a bearish candle and then you see the break of a red candle, right? Bearish candle. When you see this break of this red candle, this is where you want to enter your short trade. Okay, that's where you want to enter your short trade. Again, there will be variables. It's not going to be smack dab on the line or on the range, but it's pretty much there. As you can see, it breaks within the golden pocket and it makes its way back down. Now this would have been a very profitable short trade, if you caught something like this. So that's Fibonacci retracement 101, very useful tool, and that's pretty much it. So I'll see you on the next video.